Hi, good evening, and welcome back to the program. My name is David Lincoln, and you are watching the Short Vol Show live on YouTube, streamed live to you from Cape Cod, Massachusetts, home of the Pilgrims. And this is just another amazing Sunday night in trading world. We have markets lock limit down. Interestingly, though, lock limit down is kind of a strange spot to be lock limit down because it really just brings us back to like right before the press conference on Friday. We had such a big rally Friday afternoon that the limit down, it like doesn't even let us get it, it's almost like the limit down doesn't even let us get back to unchanged. It's like if the market stopped right here, it's almost like we'd be up on the day from Friday still or something. So it's a really weird spot. It's almost like it seems like there didn't really need to be a limit right here because over the last 48 or two trading sessions, we're only like right in the middle of the unch area. So it's weird. And you know, I was talking privately with people before the futures opened, and we got the rate cut, and that seemed to be very bullish to me, and yet we're limit down. So it's just, I don't know, it's very confusing to me why we're limit down right now. It seems like rate cuts, 700 billion being invested in the market, seems like that would like be bullish to me. And also, I was talking with a friend in Singapore, my ex-Goldman guy in Singapore. If you're out there, if you're watching, I'll say hi. I won't say your name exactly, but and he was talking about how, well, in Singapore they're like, oh yeah, you know, the coronavirus, yeah, we it came here, it's over with. We're moving on to the next thing, and it seems like that's probably going to happen in the U.S. It's going to reach an apex, and then we'll move on to the next thing. And I realize that there's a lot of bearish news out there today. Let's go to Drudge Report just to look at the news. You know, one of the big things which somebody in Man Accounts, I think, is referring to in the chat is that you know, Europe has reported a lot of increased cases, and now they're saying Europe is the center of the world as far as the coronavirus, and that is some negative news. And then we've got Spencer saying Fed used the last arrow in their quiver. And if you look back to my videos during the rate cuts at the beginning of this year, there was a certain time where the Fed came out and he didn't cut. And the next little while, he got such grief from the administration, and politically, they wanted him to cut, and he didn't. And he got such grief that he kind of caved to the administration and he cut rates, even when the economy was like, at that point, could have arguably been doing well. And so, you know, as you cut more and more, you erase the ability to cut more. And so when the economy is doing well, you want to raise rates back up, and that gives you arrows in your quiver, to use that analogy. And, you know, there's been a lot of rumors spreading around that there's going to be quarantines in the U.S. coming up, and they're going to try to lock it down. And I look at, you know, what do you look for now to be bullish on the market? For me, seeing the administration actually taking the appropriate steps to deal with this crisis seems like a positive thing. You know, what have we learned from the situation in China and the Far East about this? What have we learned from the quote-unquote mistakes that happened in Italy about this? And to me, it seems like if we can lock things down really a lot, but I'm not an expert on it, so I'm not going to speak widely on the coronavirus here. But it seems like if we can just slow the spread of things enough to get the systems in place, then that will be helpful to us. But I feel like maybe we've reached the worst of the volatility, you know, of the height of the VIX. We'll have to wait and see, though, because we don't know yet. It's hard to say right in the moment. You know, I have a bunch of friends who are recent arrivals in the United States, either from the Dominican Republic, Bulgaria, and whatnot. And a lot of them have not been engaged in the stock market up until now. But to a person, they've come to me in the last week and said, look, the market's way down. I want to get involved. I'm going to put a couple $1,000s in the market. I'm just going to leave it because, if I come back in 5 years, it's going to be up from here. And this is unprompted from me or anybody else. So there's going to reach an equilibrium. We can't say if it's now or if it's a week from now or 3 weeks from now, but there's going to reach some sort of equilibrium where people legitimately are buying the dip. Not buying the dip just to sell it tomorrow, but are legitimately saying like there's some value in buying the market here. We've had several sessions of every rally gets sold back in your face. It starts to rally, it gets sold back in your face. I think the general retail at some point, there's a lot of psychology going on here. I think the general retail public at some point is going to like catch on and be like, okay, so the thing to do is you wait for a rally and then you get short. And as soon as, general retail starts getting short on every rally, then that's going to flip around and not work anymore. So we're going to have to wait and see what happens. In a sense, it would be interesting to kind of debate whether these circuit breakers are good or not, because I'm curious as to where this market would have gone today with no circuit breakers. Because I suspect it would have found support at some lower level and then maybe rallied off of there. But as it is, with the circuit breakers in place, we are just kind of in a holding pattern right now to see what happens next. So let's talk a little bit about the VIX. When it's an overnight session, a lot of times you look at the futures because the VIX isn't printing and you say, I wonder what the VIX would be. And you can kind of extrapolate. Well, that's easier at this point than during most times because we're right up on expiration. Expiration's coming up soon. So the front month future is going to be pretty close to the price of the VIX. We saw the spread narrow to what was it, like 5 or 6 points on Friday, but that's going to come in even more. And so when we see right now, for example, the front month future 60-40, when we see that, the VIX isn't going to be that far off of that. So I would say the VIX open right now would be somewhere between 62 and 65, something like that. So what things I'm looking at are we making a lower high in the VIX right now? And if we look at a 5-day chart of the VIX, we are indeed making a lower high in the VIX right now. And is that significant? Well, we have to wait in time to see. But my feeling with this right now is that there is a certain point where we will reach the height of the VIX and things will start to kind of recover from there. Was the 77 the height of the VIX? We don't know, but I suspect that it was. And I know that's kind of a bold statement. Only time will tell if that's the truth. But I suspect that 77 may have been the height of the VIX. Now, that doesn't mean that we're not going to rock and roll. A 50 VIX is still rocking and rolling, and we could stay at an elevated level for quite some time. I did have that chart of 2008 pulled up for a little while. Let me see if I can quickly make that chart come up again here. So let's see if we can do this quickly. Custom. So what do we have? We had 2007 to 2009. 2007. Because this, you got to try to go back in history to find similar situations because to kind of compare this to, because it's not that easy to compare this to you have to kind of move back into something like this. Okay, so here is the rundown from the 2008 financial crisis. So what can we see from this? Well, we saw kind of like what we had. We had the initial like mini spiking, and then it built up for days. It kept getting higher and higher. That's kind of what happened with us. And then we had this, this big down move here, and then another second big up spike, and then it slowly started to taper off. But look at the scale of this. I mean, this is over months, right? So October, that was a whole month where we're like up above 50, and it. I mean, it was a long period of time. Down limit crew, Dave Modell in the house. What's up, buddy? Yeah. So as I was saying, this down limit seems, the lower we go, the tighter these limits are in point terms, and so it seems kind of like dinky. This down limit, I remember before the down limit meant more points in the Dow because just the mathematics of it coming from a higher place. So now down 1,000 points, it's like, oh, it's only down 1,000 points, big deal. It kind of feels less scary now. I guess you get used to anything, but also just once again the fact that this limit down thing, it only brings us down to like where we were midday on Friday. So I don't really know what to think of it so much. And this clue of the front month VIX future just really not making new highs really is interesting to me. Let's see. So that's kind of where we stand, and we're in a holding pattern. I did have my rally cap on. It looks kind of goofy, but I will put it on again just for a second to tell you I'm in rally mode. I did buy a bunch of stuff. What did I buy? I bought YOLO. I don't know if you guys are even interested in this stuff, but I did. Here's my rally cap here, so you can make it inside out. I don't have my Mets cap on, but I picked some stuff to buy. I bought CCL. Is this going to work? CCL. Carnival Cruise Lines. I paid $17.15 for Carnival Cruise Lines. Then I bought YOLO. I mean, I know we've talked about these MJs so much, and Dave Modell, if he's still here, will agree with me that we've talked these to death. We have a friend who's like, his whole YouTube is about MJ stocks, and I don't really know how he keeps it going after all this. But look at this. That's just in the week. But if we go out a year, YOLO hasn't even been existed a year, I don't think yet. But from 26 down to 7. Well, the thing is like anything you buy down here, the fact that I managed to avoid being long on the way down and all this stuff, anything you buy down here for the long term is eventually probably going to work out. The question is, am I capable of just forgetting about it and leaving it there? Somebody accused me online of overtrading recently, and in a sense, I think I do overtrade. Certainly, a lot of these trades that I put on recently, if we get a nice pop, I'm out. I don't have any opinion that we're gonna, rally straight for a long time. I'm just trying to make trades where, like, if we have a big down day, buy a little. If we have a big up day, sell a little, and try to generate some income right now. It'd be great to go through this thing. I had a good thing that I avoided the being long on the way down, but let's try to make some money here. I didn't avoid getting killed in the VIX. I got hurt pretty badly with this whole VIX thing, as many people did, I know. But we've got to move on from there and trade our way out of it, kind of. I don't know. What do you guys think? Weighted average. Right now, okay, so weighted average is 50. Friday close 44. Yes, so we're certainly higher than the Friday close. I realize that in the VIX, but I'm talking about like comparing the VIX, the trend over the last few sessions. The VIX got up to 77. There's the high, and I feel like we're not going to revisit that high, but it's very close. Time will tell. Does that really matter? It's questionable whether that even really matters because, once again, the term structure is inverted upside down. It's like a turtle chip, and until that straightens itself out, kind of all bets are off with these volatility ETPs. It's just the space we're in right now, unfortunately. Now, why is that doing that? Let's see. Here we go. So here's the term structure. Obviously, the VIX is not that line. The VIX is somewhat way higher. We've got massive backwardation, and even where we ended on Friday, we were in backwardation. We need a massive rally to get the VIX back under the futures, and until then, kind of all bets are off. And there's not a huge advantage to shorting the VIX versus getting long it. In fact, the edge is to the upside right now as far as the backwardation / contango thing. The edge is to the upside. As far as like just historically, we're obviously high vol. So if there was not backwardation in contango, the edge would probably be to be short the VIX right now. So those two cancel each other out. I've already kind of talked that to death in our last live stream, so I'm not going to go through that again. But, I'm just kind of shocked that we are limit down right now. The market's not doing what I told it to, so got to write to my congressman or something. The market, I wanted it to be up and it's down, so what can you do? It's frustrating. It's hard to figure out. We got to wait till tomorrow morning to see what happens. It was extraordinary how high the VVIX got on Friday. And let's check out the VVIX tomorrow and see what happens with it. Because, 171 is a high. And certainly people were buying vol professionally on Friday. And I don't, to be honest with you, really understand that. I watched other people's commentary, and I was watching TheoTrade commentary, and it's interesting. We have different takes on things a lot of times. Don Coffin really doesn't talk about the term structure and whatnot very much at all, and so his analysis is totally different than mine because I see things in terms of, well, the backwardation and the term structure and the roll yield numbers having a huge effect on things. He'll come out and say stuff like, well, the April future didn't go down much on Friday, so that means that traders are scared. Whereas for me, I say, well, the VIX was down like 17 at one point on Friday, and that means that vol's coming in. The actual reason why the April future didn't go down is because we were so extended already in backwardation that the system is just unwinding itself. So it really depends on. We have a different kind of view of things, but that's okay. Traders always have a different view of things. All right, so let's see. If this I had I had 35 UXY calls for 16 cents, and I closed at 155. So you were long UVXY calls? Is that what you said? Or you were short them? VC analyst. I don't totally understand the trade. But like I'm saying, we have to figure out a way to make money in this situation, and finding something that you can kind of see moving around a lot that you can try to scalp. Oh, I see what you mean. Yeah, that's a frustrating thing. So you bought them for 16 cents. Well, I mean, at least you made money on them. You made a huge percentage on that trade. I know that it's not $35, but you did make a huge percentage. 16 cents to 155. I mean, that's a huge percentage winner. So you just got to look at it that way. Nobody can get the whole ride on stuff. And we don't even know where UVXY is going to open yet, do we? I mean, don't kick yourself for selling them early until we reach the open on tomorrow, because we don't know what's going to happen before the open tomorrow. Yeah, we're limit down, and limit down mostly means that we will be down on the open, but we don't know for sure. I mean, if a massive rate cut didn't save us today, then I don't know what they could come out and say that's going to make us rally from here. It's kind of it is kind of frustrating. So I have been watching, I don't know if you guys have been doing this, but I've been watching the Nikkei lately because it's open and trading and not limit down, and it's something you can watch. The symbol is NKD, and it's something that you can watch. NKD, let me pull it up. because it's kind of boring when everything's limit down. There's nothing to watch. Anyways, I don't know. I'm just really frustrated. I thought, I was talking with people. I saw the rate cut. I was like, oh, good, we're going to rally. And now it's like, all right, now we're limit down again. But see, limit down, once again, it just brings us to where we were on Friday. So there's no resolution here. A, and B, just personally, forget the stock market. This whole situation is kind of scary. I mean, we're going to be locked in our houses basically in the U.S. now? It's a scary situation. So I think I speak for everybody when we say, let's just get through this. Let's have this virus thing get over with so that we can move on here. Because it's just waiting around for something to happen. It's like we're just waiting around for something bad that we think is going to happen. And we're kind of, we feel powerless to do anything about it. It's like, why can't Bill Gates just come up with a vaccine or something? I know his foundation has donated money towards helping towards a vaccine. I watched this thing that said his foundation had given $35 million towards helping to find a vaccine, and one of the companies working on a vaccine said they need $2 billion. So they're like, we have a little shortfall. We only have $35 million out of the $2 billion. But the stuff. It seems like it's the coronavirus. It reaches an apex in a country, and then they kind of get over it, like China has, and then it's kind of on the tail end of it. So it'll be happy just to get us to the tail end of it. Do you think Goldman Sachs' target of SPX 2000 is realistic? I don't know. I don't think so. I think that if we got to 2000, people would come out of the woodwork to buy it. I certainly would. The Theotrade guy is acting like he thinks it's going the market's going way lower. He put up a chart of a 20-year chart of the market, and I think he was trying to say that it could go way, way, way lower. What did he put? He put 19, 20 to now or something like that. Is it going to do it? No, it's not going to do it. I can't. I don't think I can pull up a 20-year chart. Let's see. Oh, here's a 20-year chart. Okay. Oh, hold on. There we go. So the guy from Theotrade, he pulled up a chart like this, and he's like, yeah, we're probably, and he was acting like, yeah, we're going to 1200 or something. But the thing is that PE ratios, once PEs get to 10, then the companies, their assets are worth more than the stock price. I think we've reached the low that I don't know if we've reached the low that we're going to get to in the market, but I think we've reached the high in volatility. I think bargain hunters are going to start coming out there. We're going to reach some sort of equilibrium here. This coronavirus is not the end of the world. Those stats that they were coming out with saying 60 million people are going to die and all that, it's not true. I think everyone just needs to calm down a little bit, and it's going to come a time to bargain hunt a little bit with this market, and the coronavirus is going to pass and life is going to go on. So everybody just calm down and relax. That's what I think. But in the meantime, we need to figure out ways to make money. I hope you guys are making some cash. I wish you the best of luck. Let's put our heads together and let's make some money. So if China was over in 2 months, if the U.S. reaches its peak in 3 weeks from now, the market's always ahead of whatever is going on. So if China, if the U.S. is close to reaching its peak as far as the number of cases, then the market's going to stop selling off by then, at least, if not sooner. And yeah, it disrupts trade and everything. But if trade is disrupted for like a month, then it doesn't justify the stock market going down 50% or something, right? Anyways, I don't know. It seems like this whole thing. Yes, we've lost a lot in the stock market. It could go down a little bit more, but we're going to reach the equilibrium at some point, and it's going to be over with. So I don't know. I don't want you guys to get too out of hand with this stuff. And you know what I really am afraid of is that for retail people, and not necessarily you guys who are kind of more sophisticated, but like new retail people, I'm very afraid that they're going to like short the bottom. You know what I mean? Like, if you're a new retail person and you see it, you're just watching the market and you see it like it rally and then they sell the rally, and then you see it a second day, it rally, it sell the rally. You see it a third day, you see it like 5 days in a row. You're like, 5 days in a row, that's that's a big number set. So I guess every rally gets sold in the stock market. And so I would hate to see like new people like jump on the sell train. Like, let's say the market goes to like, 2100 or something, and people are like jumping on the sell train and short from 2100. That would be bad. Let's see. The shortest recession was 8 months. This one is just getting started. Yes, we certainly could go into recession, and we certainly could stay low for a while. I mean, what could happen, a scenario that could definitely happen is we end up going to like 2400 or something, and then we just sit there, and like volatility comes in, we stop having like 1,000-point ranges, and nothing's going on, and then it just sits there, and it takes forever for us to go anywhere again. Something like that could happen. But I don't see volatility, even if we're in a recession for a period of time, I don't see volatility staying at 70. It's just not. People are getting tired of like, buy, sell, sell, sell. And volatility will come in. I mean, that's the beauty of trading the VIX, is that we don't need the market to rally back to the highs to make money. We just need things to calm down a little bit. And it's going to reach a point. I don't know if the VIX high of 77 is the high from this situation. I suspect it is personally, but I've certainly been wrong a lot lately. So don't, put your eggs in my basket. Don't trade based on my positions, because I have not been hot lately at all. Completely honestly with you. But I suspect that 77 was a high. I am short volatility here. And there you go. That's my opinion. Like I said, I can certainly be wrong. I did load up early Friday on some of this stuff. If we open where we are here right now, I will still probably be profitable on those trades. And if we start to look like we're heading lower, maybe I'll dump them. But this circuit breaker seems like a gift today, in that it doesn't seem. It seems like it triggered really quickly, and that it's not down that much, because all we did was give back like the last hour of trading. So we'll have to see where we come from here. Dow futures are down 1,000. However, just to reiterate one more time, if we look at a 5-day chart, you're going to see that the Dow futures are just retracing where they were on Friday, like right before the announcement, right? So we're higher, with the lock limit down right here, we're higher than we were a lot of Friday. So this whole thing doesn't seem that like meaningful. Yeah, it's meaningful that we're down, but we're going to have to wait and see what happens Monday morning and where this goes from here. I suspect we're going to find support in this marketplace. I suspect we are not going to break that low of Friday, but of the overnight session Thursday to Friday. But I certainly can be wrong. Even if we do break the low from Friday, if we don't break that low for another week or two, then vol could certainly come in the meantime. I don't think we're going to get back to 70 vol again. Once again, I certainly could be wrong. Thanks so much for tuning in. I know that there's people out there who have a different opinion than me on this stuff, but I want you guys to just breathe, relax, take care of your families. The market, there's going to be, in my opinion, there's going to be bargain hunting coming up. If you're not buying now, be ready to buy some stuff in the future sometime soon. Excuse me. So my Thinkorswim just announced that we are limit down. We are limit down right now. We'll have to see what happens tomorrow. The Fed cutting rates should be bullish for the market, but obviously it wasn't bullish enough to counteract all the negative news. If we look quickly at the news headlines before I let you go here, we have news headlines out of Europe saying that the coronavirus patients, the number of patients in Europe has increased drastically. We're also hearing that travelers, the limit on travelers coming into the U.S. has been expanded to include also the U.K. and Ireland after more cases out of the U.K. and Ireland have occurred. Italy, 368 dead in one day. World going into lockdown. And we'll continue to follow this. You know, officials are saying that if you don't have to go outside, then don't go outside. This is an airborne illness. So I don't know if you guys have watched some of the coverage from like Joe Rogan and whatnot, but they're saying that like those masks and stuff and the gloves people are wearing in public is to a certain extent not that useful because it's airborne. So if you're in a room, you know, I was serving a meal to people in a room yesterday, and if you're in a room and it's airborne, it's flying through the air into your face. So if you use gloves to hand somebody a plate for their dinner, but you're near them, if you have it, they're going to have it. So it's very easy to get this thing. But we're just going to have to wait and see how this plays out. It's not the end of the world. We are going to reach a turning point here where there's going to be positive news. And meanwhile, there's bargain hunting. This is, for some people, a once-in-a-lifetime opportunity to buy stocks at a deep discount. So if I were you, I'd be pouring through lists of stocks and trying to find some candidates where something has way oversold that you might be interested in purchasing to hold on to for a long period of time. That's certainly what I've been doing. And in the meantime, don't let this stuff stress you out too much. This will pass as well. We're all in this together, and this will pass. So I hope you guys have a good evening, and I'm excited for tomorrow morning to see what happens. I suspect we are going to come off these lows, but we'll have to wait and see what happens. If we look back in time, we're not that far away from the limit down thing on Thursday, and we are off the lows of pre-Friday. So we'll see what happens from here. There's good news and bad news, and I believe we're off the highs on volatility, but time will tell. Thanks for watching, and have a great rest of your Sunday evening.